I'm starting to wonder, wondering if everything we thought we knew about macroeconomics is wrong. Okay, great, it's been a long time since I've taken an economics class, but so much, 40 years, but so much of what I was taught simply doesn't fit with what we're seeing right now. For example, back in the day, they liked to tell us about the Phillips curve, the idea that there was an ironclad relationship between unemployment and inflation. When unemployment is low, it's supposed to cause an intolerable level of inflation. To be fair, no one uses the Phillips curve anymore, but the models they replace it with, they don't seem to be working either. As the job market booms, wages start to rise, and that wage inflation then works its way through the whole system. I mean, that's what happened 50 years ago when the jobless rate got this low. But it's not happening now, even though we have a strong job market. Wages are barely up. That's not all. The Labor Department is supposed to be tied. To our gross domestic product. When our GDP is decelerating, as it is right now, usually that's pretty bad for jobs. We're now in a bizarre situation where the unemployment rate says the Fed should raise interest rates, but GDP growth says the Fed should cut interest rates, like it did earlier this week. Why do I bring this up? Because there are a ton of commentators who act like economics is a hard science, and they throw you off the scent of making money in the stock market. Now, these people roll out discredited theories from 40 years ago to come up with arguments about what the Fed's going to do next or should do next. You see, that's no longer how it works. Orthodox economics has only led us astray. Fortunately, Fed Chief Jay Powell seems to realize that. He knows that we're in uncharted waters here. He has no idea whether he'll need to cut interest rates again because he needs to see the data as it comes in before he makes the call, or keep them just steady. And anybody who tells you otherwise is just wrong. They're making stuff up. Powell gets it because he's been burned by economics before. Remember, a year ago, he was talking about 3 more rate hikes, all because the orthodoxy says you need to tighten when unemployment is low. Turns out the orthodoxy was dead wrong. He had to reassess the situation, and then he cut 3 times. Cut when he thought he'd raise. Cut 3. Hey, don't you think it's hard to have been more wrong than that, frankly? Don't you think you'd lose your job if you were that wrong? For whatever reason, economics doesn't seem to have much predictive power in this environment anymore, and relying on these theories has become a fool's game. I think Powell understands that the industrial economy needs help, even as the much larger consumer economy is humming along just fine. He's broken from the orthodoxy, and I salute him for that. See, I'm a company-by-company guy. With the exception of Honeywell and United Technologies, do you know that I can't think of any industrials that are doing really well? They're either being hindered by the trade war or hobbled by a strong dollar. And the dollar's strong because our rates are too high versus the rest of the world. That's why it made so much sense for the Fed to cut on Wednesday, and why they might need to keep cutting down the road. Now, every time the Fed eases, you hear from these self-appointed experts who tell us that low rates are about to settle a ruinous bout of inflation. These people have been wrong for the last decade. Every single time, but they still cling to the same doctrinaire attitude. And by the way, they act as if they've been right. But the relationship between employment and inflation it broke down, right? And I think it's because we have so many deflationary forces in this new economy. With Walmart and Amazon and the cloud-based software companies driving down prices daily, the Fed has a lot more leeway to cut rates. If they can boost employment and GDP growth without causing inflation, well, that's what they should do. There's no downside. I know what the textbooks say. Those textbooks are obviously and empirically wrong. It is time to put them and their believers out to pasture. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.